Electric vehicles, or EVs, are sparking a revolution in the automotive industry. If 2021 was the year for electric vehicle stocks, 2022 is the year for actual deliveries. At least that's the wager. Welcome to Electric Exclusive. Today we'll be looking at EV stocks and analyzing if they're a way to get rich. According to some forecasts, lithium demand is expected to triple by 2025, with demand for electric vehicle batteries exceeding the world lithium supply. Electric vehicles are one of the several thematic investing opportunities that have gained popularity in recent years, and people are interested to see exactly what this industry has in store. This means that the metal itself, or the mining business that created it, could be a valuable investment if the electric vehicle market grows in the future. This is because as the number of electric cars on the road grows, so does the demand for the materials used in their batteries. And with this, many electric vehicle producing companies sprung up and are listed on the stock exchange market. If you want to enter into EV stocks, consider some ranges. There are pure bets like Tesla or TSLA when it comes to electric vehicle investing. However, semiconductor companies such as NVIDIA provide chips that operate as the EV's brain, so there are chances to invest in them. Alternatively, you may invest in Albemarle or ALB, a leading low-cost lithium supplier, a critical component in electric vehicle batteries. EV Charging Networks ChargePoint, CHPT, EVgo, Blink Charging, or BLNK, and Wallbox are among them, WBX. Hyliion, HYLN, is working in electric big rig vehicles and powertrains that can run on renewable natural gas and hydrogen fuel cells. Alternatively, you may invest in BorgWarner, or BWA, a diverse car parts manufacturer that profits from its gas-powered engine parts and its new revenue streams from electric vehicle components. Battery packs for commercial electric vehicle fleets are manufactured by Romeo Power, or RMO. Battery enclosures and e-drive gearboxes are supplied by Magna, or MGA. Investors are making a bet on EVs going mainstream. The global sales outlook is promising. According to a Deloitte report, EV sales, which first topped 1 million globally in 2017 and hit 2 million in 2018, are expected to increase to 4 million by 2020 and 21 million by 2030. Apart from the fundamental EV makers like Tesla, giant automakers are making transitional moves into the EV market. Mercedes with its EV flagship named EQ, General Motors, or GM, and Ford, F, are also transforming into electric vehicle powerhouses. With Ferrari set to release its first electronic supercar in 2025, Jaguar joined in the transition with its release of an all-electric I-Pace in 2019. Electrification of transportation, it appears, is a trend that will not fade away, providing investors with long-term growth potential. If you're an investor, then this is for you. Looking to diversify your portfolio and become wealthy by investing in electric vehicles? Electric vehicle stocks could be the way to go. Here are some ideas, but don't forget to do your research. Several challenges are currently hurting the electric car industry's short-term stock value, but not its long-term value, such as chip shortages. Buying strong stock from big-name industry heavyweights, whose stock has fallen below average, is an excellent strategy for building a long-term portfolio. The EV stocks were impacted by the COVID-19 lockdown as well. Due to lockdowns in early 2020, the pandemic had a moderate impact on the EV charging business. Steel, copper, and aluminum extraction have all been hampered by the COVID-19 epidemic. They have now recovered, however. One of the best ways to identify good EV stocks is to determine which ones are currently undervalued. When analyzing undervalued stocks, it is important to consider their history and potential, and how they are trending compared to the general market. Here are Chinese EV stocks to watch. NIO, or NIO. NIO's lines of vehicles, charging stations, and other products dominate Chinese electric vehicle innovation. Its vehicles are self-driving, demonstrating a vision for the future. NIO's quarterly sales improvements are significant, with an overall increase of 9.8% and a year-over-year growth of 102.4%. from the second to the third quarters of 2021. However, supply chain concerns are currently dragging down NIO's stock values. The resolution of these difficulties may result in an undervaluation, which clever investors may take advantage of. NIO's proposal for improved electric vehicle servicing stations, which will revolutionize how EV drivers travel vast distances, give investors confidence in the company's future. NIO expects to launch 3 new products in 2022 based on its technological platform in the near future. XPeng, or XPEV. XPeng, another of China's massive electric car powerhouses, stands in opposition to NIO. In the third quarter of 2021, XPeng outperformed NIO in car deliveries, increasing by 199.2% year-over-year. Xpeng sales are lower compared, but the company's predictions for the year are solid, especially in the face of shortages. Xpeng's pushes into technology have investors thrilled, with its software Xpilot promising advancements in its electric vehicle fleet. Here are some American EV stocks to watch. Fisker, or FSR. Fisker uses a somewhat different manufacturing process than some of its competitors, making investors wonder how long this electric vehicle company will last. According to the Los Angeles Times, the business plans to introduce select models of its Ocean SUV, produced by Magna International in 2022, and is presently gathering funds to begin production on a second vehicle. Project PEAR, or Personal Electric Automotive Revolution, is said to begin production in late 2023 or early 2024, according to Fisker. Fisker appears to be on the right track, according to investors. Fisker's unusual approach to prioritizing design while outsourcing production is expected to provide encouraging results. Tesla, or TSLA. Tesla is the elephant in the room for EV stock investments. Tesla stock has a 97 percentage point composite rating and a 72 percentage point EPS rating. The top auto and electric car stock forecast a 50% yearly increase in vehicle deliveries by market capitalization, with 2021 projected to be even quicker. Delivery numbers increased by 36% to 499,647 in 2020. The Cybertruck, the company's first electric pickup truck, will debut in late 2022. The new Model S Plaid is Tesla's fastest car yet, going from 0 to 60 miles per hour in under 2 seconds. Tesla is likewise having a sales boom, with fourth quarter sales and deliveries easily surpassing analyst projections. According to CNBC, Tesla delivered 308,600 vehicles during the quarter and 936,172 for the year, versus analyst predictions of 267,000 for the quarter and 897,000 for the year. Even before the fourth quarter deliveries were revealed, the stock had climbed over 30% in the previous year. General Motors. On June 16, 2021, General Motors again hiked its spending on electric and autonomous vehicles to $35 billion through 2025, up from a prior target of $27 billion, and aims to launch 30 new EVs around the world by then. The widely awaited Hummer electric truck from General Motors is expected to debut in late 2021. By mid-2022, the Cadillac electric SUV will be available, followed by a Hummer electric SUV in early 2023. The IBD composite rating of GM is 75, while the EPS rating is 70. Investing in the EV support businesses is just as wise as investing in the vehicles themselves. These well-established charging station companies are prepared to float in the wake of EVs for a long time, with large regions to serve and significant growth potential. ChargePoint, or CHPT. ChargePoint has a 73% share of the North American charging port market as of April 2021, and sales increased by 79% year-over-year in the third quarter of the company's fiscal year 2022. Investors are confident in ChargePoint's ability to deliver on its promises as it expands into Europe with a 3-year plan to increase revenue to $1 billion. Blink Charging, or BL&K. Blink Charging has expanded across the Middle East, Europe, North America, and now India, where ChargePoint dominates in a single territory. However, despite recording revenue growth in the third quarter of 2021, the company missed earnings projections and its stock has dropped 40% year-over-year. In short term, the worldwide semiconductor shortage affecting the entire car sector will continue to crush EV stocks. However, additional government support for electric vehicles is likely as prices fall in long term. So in the long term, having an EV stock in your portfolio might be a way to get rich.